Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend. I'm actually back. I'm officially back from vacation and hopefully giving you guys some updates on everything that's happened in the last 2 weeks, which is not always good, but at least we can give you guys an idea of what's going on. So, before I get right into it, I'm gonna do a quick dad joke. Dad joke today is who are the youngest members of the military? The youngest members of the military. The infantry. Get it? All right, so getting right into it. Last 2 weeks have been rough on mortgage rates. About 2 weeks ago, things were really looking really good, and then over the weekend, the whole Iran conflict happened in the Strait of Hormuz. Now, what was tough about that whole situation was kind of a twofold. Is one the conflict itself, and then what the conflict has caused in terms of oil prices. So, if you guys don't know, there's a lot of oil that leaves the Strait of Hormuz going through Iran. And a lot of that oil, about 45, I guess what I've been reading is that China gets about 45% of their oil through that Strait of Hormuz. So that's really important for China and, of course, the rest of the world because China has a lot of our manufacturing. So, and that causes inflationary concerns. So, if we're looking at the charts, kind of give you an idea of how much has changed with just mortgage rates and oil prices. We see oil mortgage rates here, they've basically gone up about a 1/4%, maybe 0.5% over the last 2 weeks. And to give you an idea how much oil prices have changed is this chart here. So if we were to expand once, about the end of February, we saw oil prices about right here. And this was a stable number. We're not too concerned about that number. And then the next 2 weeks happened, and then oil prices shot up about $30 per barrel. Now, this is oil per barrel, and this is a really important number. Whether you understand this concept or not, it's the idea is that the cost of oil has gone up by a lot, almost by basically 50% over in just in the last 2 weeks. And at the same time, if we look back at the mortgage rate chart, mortgage rates have gone up, a decent amount since the end of February. So basically, March 1 is when things pretty much have gotten worse. So we don't really know how long this is going to go. The times we've seen this in the past, we saw this last year, and we saw this especially during that year when the Ukraine conflict happened. But we did see this last year, and what we're expecting to see over the next week or week and a half is that things start to calm down and go back to where they were 2 weeks ago. And same thing with oil prices, that they go back to where they were a week ago. Usually in the first week, things get kind of crazy, and then they eventually kind of figure stuff out. So we hope that in the next week, things get figured out is the idea. And the price of oil also comes down as well. So overall, that's what's tough about what mortgage rates have seen in just the last basically week and a half, 2 weeks. So we hope that we resume and go back down to where we were. And then hopefully the forecast of what we're hoping to see by the end of the year still continues on, because I had a lot of clients who are about ready to refinance, and then rates got worse. So that was what's really tough. Now, last week, we also got the BLS jobs report. A lot of the jobs report that we got in addition to the BLS has shown that the job market is in fact slowing down. Now, how the Fed is going to react to this is going to be very different, because had it not been for this Iran conflict, between the inflation reports and the jobs report that we just got, showing that the unemployment rate is, up to 4.4 from 4.3, we're seeing a lot of weakness in the job market. I mean, just on layoffs alone, we've seen about 50,000 job cuts in just from last month. So we're seeing the job market getting really weak. Inflation reports are slowly coming down. If it not been for this Iran conflict, we probably would have seen the Fed probably lower the Fed funds rate, maybe cut rates a little bit. But with these oil prices and the Iran conflict, they probably are going to hold off on doing anything until this all gets resolved, because there's so much volatility right now. There's no stability yet. So once we get stability, I'm sure I'm guessing they're probably not going to change rates at all in the next meeting. And then probably in April, if things have calmed down by then, and maybe the jobs report and labor report numbers show more weakness, they may actually cut rates then. So we'll see, especially with the new Fed president coming in. We'll see how they're planning to attack these things and stabilize our economy. Otherwise, that's about all I got for you guys today. Hopefully you guys got something out of this, and have a great week. Nuke out.